Welcome to Fresh Talk News Channel. Today, we delve into a major update in U.S. trade policy. President Donald Trump hopes his new wave of tariffs will spark a manufacturing renaissance in the United States, but according to experts, the reality is more complicated. On Wednesday, the president announced sweeping tariffs, including a baseline 10% levy on all imports. He also targeted specific regions, 34% on China, 20% on the European Union, and 46% on Taiwan. Trump declared, jobs and factories will come roaring back. We will supercharge our domestic industrial base, pry open foreign markets, break down trade barriers, and ultimately, more production at home will mean stronger competition and lower prices for consumers, he said during a press conference. The U.S. has lost about 6 million manufacturing jobs over the past 4 or 5 decades as companies moved operations overseas, largely due to lower costs. That's according to Harry Moser, president of the nonprofit Reshoring initiative. Moser said the tariffs are a good starting point, but emphasized that addressing the strong dollar and rebuilding the workforce are essential steps. He also noted he would have preferred smaller tariffs than those announced. Smaller would be easier to defend, but still enough to drive reshoring and foreign direct investment beyond our current capacity to build and staff factories, he said. Moser believes these initial tariffs are meant to open negotiations. As long as he convinces other countries he'll keep pushing until the issue is solved, they may cooperate, perhaps letting their currencies rise, lowering tariff barriers, or even encouraging their companies to invest in the U.S. Moser added, business is expected to proceed cautiously. Still, experts say there are many hurdles to reshoring, including uncertainty about how long the tariffs will remain in place. Given the unpredictable nature of the path forward and the long lead times to build industrial capacity, we expect most businesses to proceed cautiously following this announcement, said Edward Mills, Washington policy analyst at Raymond James. These are long-term investments, and as a businessman, you've got to justify and rationalize them, said Panos Kavelis, a professor at Washington University in St. Louis. If there's significant uncertainty, businesses may invest, but conservatively. They want to see how it plays out. Kavelis' research on Trump's 2018 targeted tariffs found they had little impact on reshoring. In many cases, manufacturers faced higher raw material costs, leading to reduced demand and production capacity. Results were mixed for finished goods, depending on demand. Christopher Tang, a professor at UCLA's Anderson School of Management, called the latest tariffs fluid and fickle, since they were issued by executive order rather than through Congress. Many companies are unsure how to restructure their supply chains when trade policy is unclear, or what happens 4 years from now, Tang said. These investments involve billions of dollars. You can't change direction overnight. Morgan Stanley analyst Chris Snyder said he views tariffs as a positive catalyst for reshoring, though he doesn't expect a major wave of projects in the short term. We're seeing small, quick-turn investments that could raise output by about 2%, he said. Confidence, not just policy, matters. Consumer confidence is another factor affecting business decisions. Manish Kabra, head of U.S. equity strategy at Société Générale, said that confidence has taken a hit. The Conference Board's Consumer Confidence Index hit a 12-year low in March. When there's a crisis of confidence, global companies that announced investments in the U.S. will pause, Kabra said. Unless we solve that crisis, those investments won't move forward quickly. Rushing reshoring could be risky. Experts warn that rushing to reshore could backfire. The U.S. isn't ready to reshore at scale, Tang said. We lack the infrastructure, the skilled labor, and even the willingness among Americans to work in factories. Rushing could be dangerous. Executives are also under pressure to deliver short-term results and face numerous regulations and high costs in the U.S. There's not a strong enough incentive to bring operations back, Tang added. Moser emphasized the need for investment in workforce development. Trump's tariff plan will fail unless we commit to massive recruitment and training programs for skilled manufacturing workers and engineers, he said. We need to move from college for all to a great career for all. What could be reshored? Since the election, companies have announced $1.4 trillion in U.S. investments, about 200,000 new jobs, according to Kabra. Hyundai leads the way with a $21 billion investment, including a $5.8 billion plant in Louisiana. Experts say automakers are likely to be among those reshoring. Trump has imposed a 25% tariff on imported cars and has vowed to tax key auto parts. Gas-powered car makers face challenges due to complex supply chains and limited incentives. On the other hand, electric vehicle companies, with simpler supply chains and growing demand, are more likely to relocate. Everyone knows the U.S. market is too big to ignore, said Covelis. Chinese companies, for example, are largely kept out, giving domestic and foreign competitors more incentive to build here. Snyder agrees, noting that electric vehicles, industrial equipment, and semiconductors are among the industries likely to expand U.S. operations rather than relocate entire supply chains. Semiconductors and pharmaceuticals, although exempt from current tariffs, could be targeted in the future. The 2022 CHIPS Act has already encouraged semiconductor manufacturing with tax credits and subsidies. The computer and electronics industry saw the most reshoring jobs announced in 2024. Per the Reshoring initiative, Tang noted that these industries rely heavily on automation and need fewer workers. For pharmaceuticals, reshoring may be partial. The question is, where will the tariffs be applied? On final products or raw materials? Covelis asked. Many active ingredients still come from China, but formulation and packaging could shift to the U.S. if that's enough to avoid tariffs. If the goal is to bring the entire supply chain home, then you have to apply tariffs aggressively and consistently, Covelis said. Some pharma companies, like Eli Lilly and Johnson & Johnson, began U.S. expansion even before Trump took office. Thanks for watching Fresh Talk News channel. Don't forget to like and subscribe for more news and updates.